we know that we don't always want to trade our time for money. So we have to look into things that we're into, such as real estate, for example, maybe even private lending, going back to businesses. What are the things that we enjoy doing that we can put money into that we know that can create cash flow for us? Because we don't want to create a nest egg, meaning we don't want to just build cash and then one day be able to deplete it all. Because when we deplete it all, what happens then?
Right.
We want to create a system called cash flow where money continues to come in without any expiration date.
You've been told that 401ks are the golden ticket to retirement. But what if we told you that there's a better way? Now, we're not talking about conspiracy theories. We're just talking about a strategy that you can use, just like the wealthy.
And it's about getting outside of the system, because I don't know if you know this or not, you might be in the system. If you
Right.
have bank accounts and loans and retirement accounts and all sorts of things, we want to help you jump outside of that box. So in today's video, let's talk about why a 401k is never or was never made for you to be wealthy.
Right.
Now, you need a little bit of a history lesson before we jump into this. What does retirement mean? Anybody? Way in the back. You over there? Retirement means that back in the day when the whole system was created, what was that, in the 30s?
In 1935,
What-
when the Social Security Act.
That one. So the point was that the industries that businesses had to get the aging population out of their businesses. It was time for you to go, Grandpa, right? Because we got to get the new, young, strappy people in the business. And retirement at that point was to literally take the people who were aging in the businesses and put them off to the side and give them some sort of income.
Right now, think about it though, during the Great Recession, during that time, people weren't living to retirement age, which was 65. So a lot of that money wasn't being used.
And, right, fast forward to today, we know a lot of 65-year-olds that are still working, that are still doing their thing, and they are not thinking about retiring. So we have to re-understand what retirement means to us, because we actually retired from corporate America in our 30s. Right? What does retirement mean for you? So, brief history on retirement and what that might mean. So when we go back to this whole thing, if you have accounts labeled for retirement, what does that consider? Does it consider market volatility? How does it play as far as taxation is concerned? And the point that I really want to ask you is, do you want your money to be locked up? Or do you want it to be leveraged? Using those two L's, locked up or leveraged. Just answer that question for yourself.
Right, another thing I would add is that the 401ks was created for employees to benefit the employers so they don't have to maintain pensions.
Exactly. So guess what? If you are a business owner and you have a 401k and that's it, we need to consider some other options because it actually wasn't even designed for you.
So here's how you should consider your retirement. Here's our little mindset shift, is retirement isn't an age. It's a cash flow goal.
Money, 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 money.
Right, because the way we think about retirement now is how long can we maintain our retirement without running out of money? So it's a cash flow goal more than a specific age goal.
Because guess what? More people are afraid of running out of money in retirement than they are of dying.
Right. So here are the 3 L's that you need to consider: liquidity, leverage, and legacy. Those are the 3 L's that you need to consider when you're thinking about retirement.
Yeah, because we don't want you to hope for market performance. We want you to think about guarantees. We want you to think about control, and we want you to think about access. And all of that means that we are taking ownership of what happens during retirement, and we're not just covering our eyes and hoping that somebody's going to make things happen for us.
Right, like being forced to take minimum distributions when you don't necessarily want to take distributions. That sounds like something that we don't quite have control over.
So the picture that we're painting today is, if you are only using retirement accounts, if that's the only thing that you have, we may be coming up a little bit short as we age in terms of the cash flow goals that we need. So what are some other things that you can bring on board into your household to support you with this? Darius and I tend to like this little product called, I don't know, whole life insurance. We have a whole channel dedicated to life insurance. And the point is, there's guaranteed growth. We have access to money without it being booby-trapped or taxed or any other issues. There's no red tape. And we can use it as an alternative savings vehicle so that we can use it to fund investments or even fund large purchases. For us, it's about control, leverage, and liquidity.
Right, and another thing that we like is trust in business entities. entities. That gives us more control and ability to create leverage
flow.
and a plan for the life that we want to live now and beyond our years here.
It's all about cash flow, family. And then next, thinking about investing. We know that we don't always want to trade our time for money. So we have to look into things that we're into, such as real estate, for example, maybe even private lending, going back to businesses. What are the things that we enjoy doing that we can put money into that we know that can create cash flow for us? Because we don't want to create a nest egg, meaning we don't want to just build cash and then one day be able to deplete it all. Because when we deplete it all, what happens then?
Right.
We want to create a system called cash flow where money continues to come in without any expiration date, because that's what's really going to save us in retirement. So we're not in our 70s thinking about, oh my God, I only have X amount more money left. And then we start having to live in a scarcity mindset because we only have so much money.
Right, and I don't want you to think that you don't need a 401k or you don't. 401k is a bad idea. It's a bad idea to only rely on your 401k.
I'm glad that you brought that in. So let's talk about a real life example. Okay, so for example, Darius and I both work for corporate America, and we were able to max out our retirement funds or our contribution. And instead of us maxing out our contribution, we just matched what the company was going to pay, and the rest of that money that we would have maxed out with, we actually used that to fund life insurance policies. The reason being is because going back to the control, going back to the liquidity and the easy access, we wanted to make sure that we still had access to it, because for us, it never made sense to throw all of our money into an account that we don't have any access to.
Right, and we had a real life experience that got us to this point. I actually got laid off from my job, and I realized that the control that I thought we had, I didn't feel like I had that control anymore. So that life experience put us on this trajectory to say, okay, if we're going to have control over our finances and our funds, maybe being relying on this one vehicle isn't going to do it for us.
Yeah, and not only just from the income standpoint as far as what we learned from that, but like once he got laid off and this 401k just like magically was floating out there that like we couldn't get access to, we couldn't touch, right? Because once you leave that employer, then all of a sudden, it kind of dispenses that 401k, and now you have to roll it over to the next custodian, do this whole thing.
Right.
It's like, wait, give me my money.
Right.
Let me get my money. So those are other things, real life expenses or real life experiences that just made us realize, hold on, what's going on here?
Right, and another experience we had was taking that tax hit up front, because we know what taxes are at this moment. We don't know what taxes are going to be in the future, at least for our personal experience.
So let's do a little bit of comparison. You be the 401k, I'll be a whole life insurance policy as far as the different benefits and categories and how they play out. Now the first benefit being liquidity. How does it pertain to 401ks?
Well, as it relates to a 401k, and we realized this when we did it, is that I don't have access to those funds until I'm 59 and a half. But if I do access it, then I'm going to have to pay taxes on it. I'm penalized if
you can access it.
If I can access it, yeah.
Because I remember, I know I'm the whole life insurance policy person, but I remember also too when we needed access to our 401k and we had to like prove we were needing it for like a financial hardship. Like if somebody didn't die or we were buying a house, those were the only two reasons why we could borrow from it.
Right, and that also depends on the job too.
Yeah, and anyways, I digress. The point is, now whole life insurance, how does liquidity pertain to me? I have immediate access, and there's no red tape or proof or anything that needs to happen. If there is cash available in my policy, I send a little loan request form to the company, email it, or I can call it in or log into my online portal, and the money comes to me within 3 to 5 business days.
Yep.
Now, let's talk about taxes.
For taxes for a 401k is tax deferred. It's not tax free, it's tax deferred until I'm ready to take those distributions.
What does deferred mean, Darius?
Deferred means that I don't have to pay taxes on it right now.
It's a fancy term that sometimes people don't understand, so that's why I want to make sure we understand.
Yeah, you still have to pay taxes, you
It's
just don't have
kicked down the road.
Right.
That's what deferred means.
And I don't know what tax is going to be in the future, but I keep talking to these other financial advisors and other people in the financial space that they don't know what the tax is going to be in the future either.
Yeah, exactly. So deferred means you ain't paying it right now, but you're going to pay it sometime soon.
All right, do we need to talk about the big beautiful bill?
Oh, no.
Oh, okay.
No, not now.
That's just...
I deferred to my answer, which is for me, whole life insurance policy with taxes. When you borrow from the life insurance company, then the loans are tax-free.
Right.
Now, we do have to talk about a withdrawal. If I withdraw money, meaning I actually take the money out of my policy, like I go to the ATM machine of my policy and I pull the money out, at that point I'm taxed. However, in the cases in which we use our policies, we always request loans so that we don't have that taxation and our money keeps growing.
Right.
Now, what's the next one? Control.
It depends on the market. Wherever the market is, whatever they're talking about on Wall Street, is dependent on market volatility. It's market dependent.
Okay, so control is, for me, I decide when and how I use it. You see where we're going here? Yeah. Next is legacy. Let's talk about legacy.
When it comes to legacy, it's taxable to our heirs. So our daughter, she can.
What does that mean?
Our daughter, she can receive my 401k or our 401k, but it's going to be taxable to her. So if she's making a decent amount of money, it could possibly put her in a different tax bracket, and she pays even more taxes on her income.
Fun. Next.
Amazing. She loved that.
Whole life insurance. There's no taxation on the death benefit proceeds that are paid out to your family. So, long story short, can you see why you don't only want to just have a 401k? Or you don't only want to have one financial product that you think is going to take you to the promised land for financial freedom? This is going to be a Lego concoction of making sure that you have exactly what you need on board to accomplish your specific financial goals.
So the whole idea of this video is for you to rethink your financial plan, or maybe even think about it, or maybe even create a plan.
That, you don't have one.
Wherever you are in your financial journey, like whether you're getting ready to retire and you've already spent 40 years putting money into a 401k, you may want to think about how you want to move forward in the future. Or if you're getting ready to get into this whole 401k idea and your job has these amazing benefits and the only thing they talk about is 401k, you may want to consider how you can take control of your financial system and 401k not play as big of a part in your financial future as advertised.
Now in this video, I realized we just talked about a 401k and compared it to a whole life insurance policy. We didn't even address the fact that you need guaranteed retirement income. And if that's of interest to you, that's going to be another product called an annuity. So I'm gonna tease that. We can totally help you with annuity as well, but the point of this video is just to talk about 401k versus a life insurance policy. So we will create more content to be able to share with you about annuities so that you can understand how you can create guaranteed retirement income like that. It's amazing. The product was actually designed for that.
Right. Now, if you want more information on retirement and you're considering the 4% rule, then check out our next video where we talk about that very thing.
And don't forget to own your own lifestyle.
Or someone else will.